Good afternoon, guys. This is just, I thought it would be a good idea to go over some of the past plays that haven't worked out, just to go over how they should have been played, how stops should have been listened to, and, lessons to learn from these plays over the last couple of months. NMTI is the one we're going to start off with today. This is a stock that we got into small a week ago on expectations of data being released on Monday regarding their heart drug. This was a play into Monday, and what we were looking for was positive drug data. First off, when you saw the headline Monday morning, the headline was not bullish at all. It was not what we wanted. Let me actually look at that headline. Essentially, the headline said heart study misses goal. Bad news. Stock traded, I believe, for the first 45 minutes to an hour over 30 cents, which was our stop loss area. If you held after watching that press release and saw the stock go all the way down here, you need to slap yourself. This was a play into news on Monday. The news was not good. Even if the news was good, it was a play into Monday. It was a Monday sell play. You sold the news no matter what the news was. If the news was bad, you got out even quicker. If you still held this play, you're still holding on to that hold and hope mode, which is not a successful trait for a trader. So the lesson here, news play, news came out bad, you run for the hills. HLCS. This is a stock we got into a couple of weeks ago on, they were suing another large company. Stock sort of hasn't done a whole lot over the last couple of weeks. I know a couple of guys in the chat room were trying to average down on this stock. On a stock like this, before the sell-off, this is not a stock I would have averaged down on anymore. And I don't believe I actually posted any ads over the last week or so. Irregardless of that, the stops on this stock were 40 cents. Company came out mid last week, out of the blue, delisting to the pink sheet stocks. They did an after hours. Was going to open the next session on the pink sheet stocks. Absolutely crappy when management does this. But charts like this and what we saw on HLCS are pretty typical for biotech stocks under a dollar. This is the risk that comes with these stocks. Even so, stops on this play were 40 cents. This stock opened at 42 cents, and there were trades actually looking at. Actually, I wasn't here, but looking at it, says the open was 41 cents, the high was 42 cents. If I was in this stock and I was sitting here Monday or whatever morning the news came out, Tuesday or Wednesday morning, I believe, and I saw news of going to the pink sheet stocks, I'm hitting sell it no matter what the open price is. Open price was above stops, which is even better. If you held through this sell off, if you didn't get the sell at 41 or 42 cents, you sell at 40 cents, 39 cents. A big problem that a lot of unsuccessful traders get into is they refuse to sell for a loss. And actually, I'm probably, now that I'm doing this video, it might be time for me to do a how to take losses and be a successful trader video, because one of the things I've been pounding into people's heads over the last few years is once you're able to take a loss, you're almost there at being a successful trader. It sounds really counterintuitive, but that is the truth. This stock, going to the pink sheet stocks, I do not trade the pink sheet stocks. You long-termers know whenever we get news like this, you run for the hills. Lesson learned, avoid it in the future. If you're still in the stock right now, all I can say is I would look to take the loss and chalk it up to a lesson learned. Don't let it happen again. Don't write a stock that's going from the NASDAQ to the OTC and strictly adhere to the stops that we give. Another play that we posted a couple of weeks ago, WYY. We had a lot of breakout stocks happening, and this was one of those stocks when I was posting in the chat room. We were running out of plays, which was why I ended up going on vacation. It was perfect timing. We entered this play too early. We entered this play right under the 20-day exponential, trying to get a time on a breakout that was going to occur. The ideal entry on this stock should have been a break of 150, not down here at a buck 42. Did hit stops. Stops on this one were a buck 35, so it did break through those stops midweek. Again, especially with the market selling off. It's one thing to ignore stops whenever the market is in full rally mode, but when you're holding stocks that are breaking suggested stops on a bad market, you really need to step back and decide what you are doing here right now. Are you scared of taking a loss, or are there other things going on right now? No trader is 100% perfect. There will be losses. The idea is you got to keep your losses as small as possible. There are going to be bad trades. You learn from them, you move on. Now, on this stock, we entered this stock too early. Doesn't mean it's not going to break out again. After stopping out at a buck 35, the way you look at this trade now is I'm not entering this stock until it breaks the $1.50 level. Breaks a $1.50, ideally we could see 165. If you got in this stock at a buck 42, let's say, on the trading alert, you listen to the stops, you sold at $1.35, 7-cent loss. Then you wait for the breakout move to possibly occur, whether it's this week, a month from now, or whatever. Breaks a buck 50, you jump back in, goes to a buck 65. You just turned your 7-cent loss into a 15-cent gain. That is how you play these stocks. We do not marry them. This is trading. Not every play is going to work out. Just because you sell a play right now doesn't mean you can't go back in and rebuy the stock. Now, the stock is holding its 50-day moving average. Would I buy it now? Hell no. What I would be looking for now after this failed breakout attempt would be a break through $1.50 to add this one back. OPXT, one of our favorite plays over the last year, sort of been treading water. Of course, stops were a buck 36 on this one, so they downticked it to a buck 34. Didn't sell off like the other plays. No problem stopping out of this play. The chart does look bottomed and is deeply oversold and will very likely rebound. Where would I rebuy this one now? I would not jump back into OPXT unless it got above the 20-day exponential. So I would be looking to buy a buck 45 on this one with a target of a buck 53. 8 cents just there. We sold it for a loss of 4 cents. So this is the way you need to start looking at some of these plays. You can take a loss. Just because you take a loss doesn't mean you cannot rebuy this stock again. Chart is probably shaping up for a run within a few days. Could possibly happen this week. What we'd be looking for is a positive MACD cross. Again, when we originally got into this stock, we were running out of stock plays a couple of weeks ago. It's bottomed out. Market was down big last week, and this one held up pretty well. But, it's one of those things. Market sells off. You go high cash, like I said. Just because you go high cash doesn't mean you can't rebuy a stock, especially, if we saw the market really go on a tear, you could jump into a play like this that's deeply oversold. XSEL stock we got in at 27, 28 cents. Our target was 33 to 38 cents. Got as high as 33 cents, and then we had the market start to sell off. Now, a lot of traders, if you're still sitting in this one as it moved back down, a good strategy to have is if you have a lot of plays, you have the market selling off, you go high cash. Just because you sell a stock, I'm beating a dead horse here, does not mean you can't rebuy the stock. Ended up retracing, breaking below the 25-cent stops on this one. But if you did not book some gains or all gains up here in the 30 to 33 cent area, you're being too greedy. Even though 38 cent is a target, doesn't mean you can't sell some at 29, 30, 31, 32. Small gains add up fast. PRKR, this is one we'll probably play down the road, but not right now. Really has done nothing since we entered this stock. Earnings were a snoozer. They sold some more shares last week. So right now this is a stock that's in a raised capital stance. But whoever's buying it is supporting the stock pretty well. Not a bad play. It's been holding up pretty well. But, again, with the market acting the way it was last week, this would be a stock I would sell without a second thought, and I would place a trigger on this one, 55 cents. If it got to 55 cents, I'd have my software trigger me alert to possibly look at it again. JSDA, Jones Soda. We played 2 stocks into earnings just because earnings stocks were doing well. Didn't work out. We had almost hit our first target of a buck 40. We got as high as $1.38. We held into earnings. Earnings were so-so. Broke below stops. You jump out, sit back, reevaluate. Let's see if it's able to hold this 200-day moving average. Similar situation on COSI. This one we actually had a fat gain on. We jumped into this one 108. Target was 135. Ended up running to a buck 40. We added a small piece back at $1.30 and under as a play into earnings. Earnings did not work out well. Market sold off. Down it went. Um, did we play this one wrong? I don't think so. We were playing this with a specific plan in mind. We were playing it on them possibly getting good earnings news. They did not. The play did not work. The market sold off. Lesson learned. We move on. Now, this is a play. Support is at the 50-day and 200-day moving average. If we saw COSI move back to this 95-cent area, very, very attractive valuation on this one. So even though, you stopped out of this one, doesn't mean you throw it to the side. You just move it down your watch list and possibly play it again if it gets to our target entry area. So what was the point of this video? Really just trying to tell you guys, do not be afraid to take losses on plays. All the plays are not going to work out. Small losses, small gains, and even if you're only batting 60% win rate, if you take your losses pretty early, you're going to come out ahead of the game in the long run. And this is a business right now. We are in it for the long term to make small gains every day and build our accounts up. Holding and hoping is not a trader strategy that will work out in the long term. So this is something I'm probably going to do it once a month. We'll review some of the plays that did not work out over the past month. See if we can, learn some lessons for it. Worst case scenario, I pound into you guys some good trading discipline that will be beneficial in the long term. And, if you've got any questions on this, shoot me an email or send me an instant message in the chat room. And I will see you guys in there tomorrow. Goodbye.